Good morning. Time now 8 o'clock in the morning in Tokyo, Friday, April 30th, 2021. Welcome to another edition of the World Bank Group Morning Seminar organized by the World Bank Tokyo office. My name is Koichi Omori. I'm External Affairs Officer of the World Bank based in Tokyo. We organize online seminars starting at 8 o'clock in the morning in Japan Standard Time, introducing the latest report presented by the World Bank Group economists and specialists. Every spring and autumn, 6 regional chief economist offices of the World Bank issue the regional economic update report. For the spring 2021, we have featured all the regions in our seminar program, except for the important region, Latin America and the Caribbean. Connecting from Uruguay this morning, we have a pleasure of having Martin Rama, the chief economist for Latin America and the Caribbean region. Martin is one of the frequent speakers in our seminar programs. He is former chief economist for South Asia region and also well known to many of you as a director of the World Development Report's 2013 jobs. Good morning, Martin. Welcome back to our program. How are you? Or good evening to you.
Good morning, Koichi, and thank you for having me with you. Thank you, everybody, for joining. Just regret not being in Tokyo in person for this.
We hope to be able to return back to previous mode, having you and others coming to Tokyo and then making the presentation in front of everyone after situation is eased. So we look forward to that moment coming in the future. All right, so we'll listen to Martin presenting the main point of the latest edition of the Latin America and the Caribbean semi-annual report in the next 30-40 minutes. And thank you very much for sending your questions in advance. We received some of them in advance. If you did not have opportunities to send your own questions to the speaker, I would like to encourage you to send them using online form posted on the announcement page of the seminar, or you can directly post your questions on the chat section on the YouTube screen. After Martin's presentation, I'll read your question and ask him to respond. So with that, I'd like to ask Martin to come in to start your presentation. Martin, over to you.
Thank you, Koichi. And everybody, as Koichi mentioned, twice a year in all of the regions considered by the World Bank, the developing regions, which are 6, we produce a report that basically takes stock of what happened, what are the challenges of the moment, and going in more depth into one topic. And as you can imagine, the last 3 editions since March, April of 2020 have been dominated by the topic of the COVID crisis. But this one in particular starts looking beyond the COVID crisis and asking what is coming up now, what should be done. So this report that I encourage you to check online has 4 parts. One is what happened in 2020. What is the balance of what happened in 2020, in the last year, essentially? Second part is what is going on now? What is the situation in 2021? What are our forecasts for the year? The third one, and I will devote more time to third and fourth, the third one is about what to expect in the medium term. What will be the impact of the crisis on the medium-term growth of Latin America and the Caribbean? Remember that before this crisis, most of Latin America had very mediocre growth, stagnant social indicators, social unrest. So will it be back to that kind of not very good normal? Will it be even worse because of the damaging impacts of COVID? Or do we have opportunities because of the crisis? And you will see that the emphasis in opportunities that come from disruption, from technological disruption, in areas where policy reforms fail to make enough progress, whether the disruptions that come from technology could allow us to have transformations. The last portion of the report is on another disruption that we see as very timely, which is in the energy sector, which again could be very important for sustainable growth in the medium term. So let me share my presentation on the report. which I hope you are seeing in the screen. This is our report. Underneath is the link. It's very easy to find. If you type Renewing with Growth World Bank, you will go to it. And as I said, the first chapter, the first part, is called The First Year of COVID-19. And the title is not innocent. We say the first year, implying that the pandemic is not over. Now, as you know, the impact of the COVID crisis on Latin America and the Caribbean has been enormous. 1 year ago, when the COVID crisis started, we were expecting the heaviest death toll to be in low-income countries. We were anticipating that countries with low institutional capacity, weak health systems, will be the ones suffering the most. 1 year has passed, and Latin America and the Caribbean has had mortality on a scale comparable to that of advanced economies, to that of Western Europe and the US. But one point we want to make in this report is that in reality, the death toll is higher than the official figures suggest. What we do in this report is to look not only at the official COVID-19 deaths, but also at the excess mortality. Excess mortality is the comparison between the number of deaths we had in each country in 2020 and the number of deaths we had in a normal year, with normal being defined like the last 5 years, the average of the last 5 years. This is not because we suspect manipulation on the authorities, on the official numbers. It's because different countries have different abilities to test, different willingness to test, different criteria to classify deaths. And so we said, let's have a common measure. Here on the horizontal axis, you have death per million people in 2020, the year 2020 finishing December. Sorry, this went up. On the vertical axis, you have the excess mortality on the same units per million people. If the two measures were identical, we will be on the 45-degree line. And indeed, you have countries in Europe, for instance, Belgium, France, Sweden, or in Latin America and the Caribbean, Brazil, or Chile, that are more or less on the line. But we also see a big dispersion. The points from Latin America and the Caribbean are the points in purple. The rest of the world is on green. And when you look at this figure, you realize that most of Latin America and the Caribbean is on the high end of these clouds of points. Now, you may say this is because the only countries that have good data on mortality in normal times are already relatively advanced countries. If we had perhaps the data from the poorest countries, it would be a different picture. However, we checked for the two African countries for which we can have comparable data, and they look very much like the green dots, not like the purple dots. If we look at these figures, it turns out that in the rest of the world, one official death from COVID was about 1.3 deaths in excess mortality. In Latin America and the Caribbean, the ratio was 1.9, so 90% more deaths than official COVID figures suggest. And some of the worst cases are in the Andes, Peru, Bolivia, Ecuador. Also, Mexico has about twice as many deaths in excess mortality as it has officially. At the same time, we have countries that, at least in 2020, had a very good performance. Of course, you see Japan here in negative mortality because, of course, if you control the pandemic well and people are not driving, there is less pollution, they are wearing masks, there is less mortality. And we have in 2020, Uruguay had very strong negative mortality. Costa Rica was basically at zero. So we had some of the worst and the best global performance in terms of COVID. But a word of caution, Uruguay is now going with the Brazilian variant through a very serious pandemic. So Uruguay is likely to move to somewhere around here. Now, the performance was also very bad in economic terms. Here you have the growth in GDP in 2020, which is mostly a decline in GDP. Again, by regions, the 6 regions of the World Bank, the only one with slight growth is East Asia and the Pacific. And you see that the worst one is Latin America and the Caribbean, comparable to South Asia, except that South Asia is driven mainly by India, except that I'm not so sure that the negative figures for India are in reality as bad as we believe, and I will come back to that. So we have a region that had the worst death toll and the worst economic impact around the world. And it was uniform across countries. There was one exception, that's Guyana, tiny Guyana, very small population, oil discoveries offshore, a bit like Venezuela, but with a much smaller population. So now that the oil exploitation is starting, we have growth that is in excess of 40%. We have a few countries that coped relatively well, Paraguay, Guatemala, but overall, we have negatives that go sometimes to -10, sometimes even -20. These are the Caribbean islands, which are highly dependent on tourism, and tourism collapse. When we put the figures together, we find that, in fact, Latin America and the Caribbean has had all sorts of combinations of performance. Here again, on the vertical axis, you have the excess mortality per million people. So this is the same information we had before in the first figure I showed. Here we have the economic cost of COVID measured as the growth rate we had in 2020 compared to the growth rate that we anticipated for 2020 at the beginning of the year. So how different the reality was from our expectation before the COVID outbreak. And again, we have many countries. We see again our Andean countries among the most impacted. We see that several East Asian countries, Taiwan, China, Korea, Japan, and also Norway, are among the ones that had the lowest impact on both fronts. And we see countries in Latin America and the Caribbean, more or less all over the place in terms of these. So we had a dispersion in the overall balance of impact that is very significant. In finishing about what happened in the year 2020, there are, however, some pieces of unexpectedly good news. And I know that with a year that was so bad, it's surprising, but let me take you through three of them. First is trade in goods, not in services, not tourism, of course, but trade in goods held remarkably well. Today, trade in goods is back to where it was before the pandemic, with a big change. Before the pandemic, at this point, China accounted for 18% of global trade. At the end of this series, China accounts for 24% of global trade. So in spite of all the global tensions, in spite of the trade policy measures, the share of China in international trade has increased substantially. And there is a reason for that. Value chains kept working in China because the pandemic was contained very early and very strongly. And as the West was in lockdown and started needing medical equipment, and then computers to work from home, and then fitness equipment to exercise from home, who supplied that? China, Vietnam, and East Asia in general. China is very important in trade for Latin America and the Caribbean because it's a big importer of raw materials, agricultural products, mining products. And you see that the commodities that China tends to import are all now at higher levels, or in the case of oil, comparable levels to prior to the pandemic. This for Latin America and the Caribbean is good news. Some people are starting to talk about a new commodity price super cycle. Second piece of unexpected good news is remittances not only held well, they increased substantially. 1 year ago, we were anticipating a decline by 19% in remittances to the region. Basically, we have that outcome, but with the sign flipped positive. And one can say maybe it's a statistical artifact, maybe migrants used to carry the money in their suitcases when they were traveling, but we suspect that this is real. Many migrants from Latin America and the Caribbean live and work in the US in activities like construction that didn't stop. They benefited from the generosity of the CARES Act during 2020, and they could send more money to their families. This makes a big difference for countries in Central America and some countries in the Caribbean. Third piece of good news that wasn't anticipated is that access to financial markets was preserved. This is quite remarkable because at the beginning of the crisis, we saw capital outflows that were even larger than during the global financial crisis. So the anticipation was that countries will not be able to tap international markets at a time when they needed to finance health expenditures, social programs, and they didn't have much fiscal space. There was a serious spike in country risk premiums, you see it here, but by now, basically, all countries are back to more or less the level of risk they were before the crisis. In fact, countries in Latin America and the Caribbean have issued more debt in international markets in 2020 than they did in 2019 at lower interest rates. So third piece of good news, which brings me to the second chapter. So where are we now and what is the near-term outlook? And the first thing to say here that is important is that the pandemic is not over. With very few exceptions, most certainly Chile, one of the countries that has vaccinated the most, and Uruguay, most countries in Latin America and the Caribbean will be unable to vaccinate their population before the end of the calendar year or well into 2022 at best. So we have to live with the pandemic. The outbreaks, for instance, with the Brazilian variant are extremely severe, extremely fast. And we cannot say that we have been very good at handling the pandemic with other measures without vaccination. Latin America and the Caribbean reacted very quickly. We saw what was happening in Spain. We saw what was happening in Italy. Countries imposed quarantines, lockdowns. The region has some of the longest lockdowns in the world. And yet it had the mortality rates I showed you. These were not effective. One can speculate as to why they were not effective. Probably getting people locked down in slums, in congested areas with poor water, poor sanitation doesn't help. People who had informal sector jobs could not telework, did not have income support, had to go out anyway, so they evaded the regulations. But here, just to give you a flavor of what it is, we do 4 correlations. The first 2 are for all the countries in the world. The second 2 are for Latin America and the Caribbean. Columns 1 and 3 are correlations with excess mortality, the indicator I used before. Columns 2 and 4 are with the economic cost. You remember the difference between the forecast of growth in 2020 at the beginning of the year and what really happened. And here we take from a database of University of Oxford the kind of lockdown policies, school closing, workplace closing, bans on international travel, the economic measures, support to households, support to firms, and the health measures, testing, tracing, face covering, and all that. You see that in general, all of these measures are damaging for economic activity. The economic cost is higher the more days with these measures you have. The only one that is good for the economy is, of course, vaccination. Vaccination makes a big difference. But the measures, when it comes to excess mortality, we will expect to see the opposite. We will expect to see that the more you have lockdowns and quarantines, the fewer deaths you have. And in reality, it has not been that way. Of course, causality could go the other way. As long as you don't have too many deaths, you don't need a lockdown or a quarantine. So we are not alleging causality. But what is clear is that the things that seem to work are things like travel restrictions on international travel, providing support to firms and households so that people are not desperate to go out, and of course, the health policies, especially tracking when tracing when it works. But the point of this figure is to say we are entering the second year of the pandemic without the vaccine and without very effective ways of containing, at least in Latin America and the Caribbean. In other countries, they may be effective. And so our forecasts at this point are for a V-shaped recovery but with the V being shorter on the upward segment than it was on the downward segment. So it's a V not involving a full recovery. The report includes those forecasts. One of the questions is, how much do we trust those numbers? Because this crisis is so different from everything we had before that maybe we are not being very good at forecasting. And so one thing we do for this report is to use big data on real time to try to infer economic activity. And our preferred metric that we are pushing through technical work that hopefully will get considerable visibility is to look at emissions of nitrogen dioxide. Nitrogen dioxide, NO2, is what comes out of exhausts, chimneys, combustion, is very much associated with human activity. Of course, the relationship between human activity and emissions is not the same across countries. If you have heavy industry, you have a lot of emissions. If you have a green economy working on finance and tourism, you have few emissions. But for each country, we can estimate the relationship between GDP and NO2 emissions. And because we can observe daily NO2 emissions on squares of 100 kilometers all around the world, thanks to a NASA satellite, we can compute what happened with economic activity. Here's what you get for quarter 2, 2020, the worst quarter of the pandemic when the entire world basically went on lockdown. And the reference point is relative to the fourth quarter of 2019, which was the last normal quarter before the pandemic. And you see how negative the numbers here are. This is GDP. This is not emissions. This is GDP. And you see countries in excess of 12% decline over that quarter compared to the last quarter of 2019. Things get a bit less bad in the third quarter of 2020. Some quarantines are lifted, and then you see already China and Vietnam going into the positive. Not heavily positive, but they are already above the level before the first quarter of 2021, where our numbers from macro modeling and from national account estimates suggest that we are still below the pre-COVID level. But data on emissions, NO2, suggests that except for Europe and some countries, Angola, Venezuela, the world is back or was back before the second waves to economic activity levels that we saw before. So this is a hint of optimism, which brings me to the third point of the report, which is, so what should we expect beyond 2021? 2021 will be a year with a lot of uncertainty, where the fact that there are variants, there are second waves, third waves, no vaccines or not enough vaccines means that we are not out of the woods yet. But what will happen after that? What will happen once the pandemic is contained, once people have been vaccinated? There are good reasons to be very pessimistic, and that has been the dominant tone in the analysis of the pandemic. And we want to repeat them, even if we are slightly more optimistic than others. First, there is a loss of human capital. Schools have been closed in many places for long periods of time. In developing countries, schools closed means that children may not come back when schools reopen. And you see that the percentage of days where the schools were closed was extremely high in Latin America and the Caribbean. The median is around half of the days lost. Very few countries had their schools open. The consequences can be important. We typically at the World Bank every decade or so estimate how much does 1 year of education contribute to earnings in adult life. And typically the answer ranges, say, from 8% to 10% per year of education. These are the estimates for countries in Latin America. The height of the bar tells you what is the return to 1 more year of education. And we have split it into two. The part that was lost because the schools were closed in green, the part that was saved when the schools were open in purple. Of course, this is exaggerating. When schools were closed, there were distance learning programs, but we know that it's not the same to do distance learning as in-person learning. We also know that half of the children in Latin America and the Caribbean do not have internet means to support distance learning. So we assume that that was lost. And the percentage lost is so huge that if we compare it to other regions, other developing regions, the 6 that we consider at the bank, you see that the worst loss was in Latin America and the Caribbean. Basically, we might have lost the equivalent of 4 to 5% in future labor earnings. Second reason to be pessimistic is there have been serious employment losses, and they were stronger for women. For various reasons, women tend to work more in the sectors that have personal contact, like retail trade, like tourism and hospitality, and also in societies that are patriarchal in some ways, when children are at home, the burden is heavier for women. So we see bigger jobs for women in relative terms. And here you have in the upper panel what happened at the worst moment of the crisis, and you see sometimes declines in employment in the order, like in Peru, that had very severe lockdown, 60% or more. But even as the economies recovered last quarter of 2020, we still see places where 10% has not returned to work. And what we see from telephone surveys we conduct at the bank is that for those who are at work, the quality of employment deteriorated. Before, at the beginning of the crisis, about 61% of those who responded to our surveys had employer-employee relationship. They were wage earners, which typically tend to be better jobs. The proportion had fallen to 53% in just a few months, and the part of self-employment, which is typically worse jobs, more informal, less productivity, increased. So second reason to be pessimistic. Third reason is we are heavily indebted. These figures show what happened in selected countries, Brazil, Chile, Colombia, to public debt over GDP during the global financial crisis, the first 3 years, and now during the COVID crisis. And you see that the trajectories in all countries are very different. The global financial crisis was followed by important growth, and so public debt over GDP did not increase much. But in the case of the COVID crisis, we are having increases that are in the order of 10% of GDP or more in just 1 year. Very few countries like Mexico that was very prudent in its spending, are more modest. But what is striking is also the end point. In the global financial crisis, after 3 years, Brazil was with a public debt of 52% of GDP. Now we estimate that it will be at 96% of GDP. And Brazil is not Japan. Developing countries cannot have the luxury of having 200% of the GDP in debt and markets be reassured that everything is okay. Moreover, we are facing a risk on this debt. For now, we have very heavy public debt, not in all countries, not Peru, not Colombia, not Chile, but still across most of the region. But at least the interest rates are close to zero. So servicing the debt is not such a big deal. But the monetary policy in the US may imply that interest rates will grow at some point in the near future, because it's likely that there will be inflation in the US. The US is adopting has adopted a stimulus package of about 10 points of GDP in an economy where the output gap may be about 3% of GDP. So there is a 7% extra gap. Part of it will go into imports. It will be China, perhaps Latin America and the Caribbean. But it may go also into higher inflation, forcing the monetary authorities to raise the interest rates. And here we compare to what happened in 2013. 2013 was when the Fed announced what was called a taper tantrum, that maybe they will start tapering the extraordinary monetary policies. And we had a crisis in many countries. So this is a reason to be concerned. Human capital, again, the detachment from employment and the worst quality of jobs, and debt with potentially high interest rates. So how can we be still slightly optimistic? Because there are other things that are happening at the same time. And I want to emphasize two. The first one is we are having a change in the composition of economic output. Structural transformation, really, of a sort that typically Latin America doesn't have. We have had all sorts of policy reforms without fundamental change. If you think how many trade agreements Latin America and the Caribbean sign, it only matches, the only region that matches that is Western Europe. But in Latin America and the Caribbean, trade over GDP has not moved. This time we are having a very serious transformation. We have entire sectors of the economy that are shrinking: tourism, hospitality, personal services. And we have sectors that are booming: ICT, logistics, finance. Of course, in the short term, we only get the slam from the sectors that are contracting. If you are a Caribbean island, it's a disaster. But what happens is that the sectors that are expanding have higher productivity than the sectors that are contracting. So if the economy, instead of going back to the way it was before COVID, went to something that resembles more the economy of today, there could be a productivity gain. Basically, you can think of the productivity of the economy as the average of the productivity of different sectors. What we do is we weight the productivity of these different sectors before COVID, and we say, what if the new economy was like the one we saw at the end of 2020? And we weight with this structure. And we find that the impact on average productivity in some countries can be as substantial as 5 or 6%. Of course, this is a back of the envelope calculation, but it's suggestive. Last thing that makes us a bit optimistic is that the sector that is expanding the most, information and communications technology, is not only a more productive sector, it's a sector that creates disruption in other sectors. And just to give you a magnitude of what is happening in Latin America and the Caribbean, if you take Argentina, Argentina had a very severe crisis. It was arriving before COVID already with a very difficult macroeconomic situation, and then COVID came on top of that. The GDP of Argentina fell by 56 billion US dollars in 2020, 56. The value of the top 3 ICT companies in Argentina, just 3, increased by $66 billion. So you may say, oh, Argentina had a terrible year or Argentina had a fabulous year. Of course, depending on whether you are in the ICT sector or in the rest of the economy. And most people are in the rest of the economy. Moreover, it's very difficult to tax these gains in the ICT sector. But that shows the magnitude of the transformation. So we asked ourselves, how ready is Latin America and the Caribbean for digitization? Because digitization can make a big difference in at least 3 areas. First, finance. Latin America and the Caribbean has very low access to finance, has financial sectors dominated by big banks that are stable, that are sound, that are solid, but do not let the development of the kind of finance that people with limited means need. Second is formalization. Today, you are in a city in Latin America and they're delivering motorbikes everywhere. Those are informal sector jobs, but they are informal sector jobs by design. We could know how much people make, how many hours they work. We could have social programs for their pensions, for the health insurance, as we do with people who are registered with a formal firm. And third is trade. We have had difficulty integrating Latin America and the Caribbean to the rest of the world through platforms. You can export services, you can export goods, you can bypass customs. So ICT is not just more productive than the rest, and is not only having a big expansion, it could disrupt the rest. And so we ask ourselves, how prepared is Latin America and the Caribbean for the digital revolution? And we do it over a range of indicators. And here you see constantly the bar for Latin America and the Caribbean is in green, and you have the other regions. And you see that Latin America is not in the best position. It's just in the Middle East, Asia, and the Pacific. Sometimes it's better, sometimes it's worse. But Europe and Central Asia is often in a better position. Now, when we do this, We also benchmark within countries. We do it across a range of indicators. And what we see is an enormous heterogeneity on the readiness for digitization. So we have not one, but two digital divides in our region. One, the one that is most obvious, is half of the people, on average, don't have access to the internet, or the internet is too expensive for them, or it's too slow for them. So they may not benefit from the digital revolution. The second split is between countries, because some countries seem very ready for the digital revolution and some others not. And one way to look at it is unicorns. Unicorns are these ICT companies that grow very fast, that remain private, that are funded by venture capital and reach a value in excess of $1 billion. Unicorns is where a lot of the action is at this point in terms of disruption, productivity gains. And so it turns out that Latin America and the Caribbean, Latin America essentially, has more unicorns than one could expect, basically 3 dozen unicorns. And what we do is we compare with unicorns elsewhere. We measure the value of unicorns relative to GDP in this figure, and of course you see the usual suspects: Estonia, Singapore, China, United States, India, Sweden. But very quickly, you see, even ahead of a country like Israel, when it comes to unicorns over GDP, Brazil, Argentina, Uruguay near that game. Indonesia is the only one that is close there. You see Colombia there. If you do it by million people, unicorns by million people, of course, the smaller countries, Luxembourg, Israel, Estonia, Singapore, Switzerland, are in a good position, while some of the bigger countries like China or India move down. But again, you have the Latin Americas in a game where many European countries are not there. So this, again, is one of the reasons for optimism for some parts of the region, not for all the region. Last point, and I will try to finish with this in 3 minutes, 4 minutes, is another area, last chapter, is another area where disruption could help us a lot. In areas where policy reforms have made progress, but not so much. And that's energy. Latin America and the Caribbean, especially Latin America, has the cleanest energy matrix in the world. We have a lot of hydro, which here is in purple, and we have also potential for solar, for wind. With this kind of matrix, if we were as efficient as plants in the US for each type of fuel, we will have the cheapest electricity in the world. We will be at around 9 cents per kilowatt hour. If we are to be responsible socially and we add carbon tax, we say, listen, everything that has emissions should be charged as carbon tax. Here is the social cost. This with the carbon tax included. We do in the report, sorry, I didn't have the slide. We do it without the carbon tax, with the carbon tax. You see that Latin America and the Caribbean should have the cheapest electricity in the world. Does it have the cheapest electricity in the world? No. It has the most expensive electricity in the world. This is the electricity paid by firms. This is the electricity paid by households. It's more than twice the efficient cost of generation. Now, part of this disadvantage of Latin America is because other regions, for instance, South Asia or the Middle East and North Africa, heavily subsidize their energy and their electricity. But the problem is not just what others do. There are problems in Latin America and the Caribbean. It's not taxation. When we look at the taxes on energy, here are the indirect taxes like VAT, subsidy. So you get the black bar, and you see perhaps Peru. Net tax not high because many subsidize gas for electricity, so it's a subsidy. A few countries are using electricity for fiscal purposes, Uruguay, Paraguay are getting margins of like 20% that go to the budget. They are inefficiency. More blackouts, lower blackouts than other regions in the world, much more than Europe, much more than we have losses. The average in the world is you lose 8% of the electricity. Latin America and Caribbean loses 60% of the electricity. You have countries losing up to more than 50%, Haiti, but even several of them, like a quarter of the electricity is lost. We have public employment in utilities. I will not tell you the figures. The last point I want to make is that here again, where we made limited progress through reforms, we have two big opportunities for disruption from technology. The first one is distributed generation. Distributed generation is the idea that we don't need only the utilities to be generating electricity. Firms that have their own generators, like paper pulp mills, can sell electricity to the grid. Those can have solar panels on the roof and also be selling and buying to the grid. Distributed generation is coming very quickly in Latin America and the Caribbean. Here you see in Brazil, in Chile, and Mexico. And if it's not done with the right policy framework, it will not solve the problems, and this is one of the issues we discussed. The last innovation that is important is electricity. We have peaks that are different during the day, especially you take into account the time difference because of the sun. If you take the part of Latin America and Caribbean, or even earlier than the Western we analyze from electricity trade in the region, in South and Chile, we could have more gains, hundreds of millions of dollars per year, especially in the Andean countries, on our hydro resources. Let me stop here. Thank you very much.
Martin, thank you very much for your presentation to summarize the main findings of the latest edition of the semi-annual report of Latin America and the Caribbean region. Let me read the questions that we received in advance, and also we received some questions coming in during your presentation. But starting with this one, which is related to rather the production process of the report itself. The question is, did you consult with the governments in the region when preparing the report? And how did you get responses? What kind of responses you get from the government after the report was launched? So let me start with this question. Martin, please.
We have engagements with government, engagement with think tanks, the ministries of finance, of course. So we take the roles of the region. We know what different people are thinking, and we use a lot of that as an input for our preparation of the report. And these are reports that see as the view of the bank. The report is not shared any pressure when there is a crisis of this sort or that sort. So we do it on our side. In general, it's very well received. This one I presented was picked up by 250 newspapers, TV stations. I think it's related to those. So it gets quite a lot of visibility. And so far, there have not been made about the.
Thank you. Martin, in fact, we have some difficulties in listening to you in the last few minutes because of the connectivity issues. So we do not want to lose your image, but would you please switch off your video just to secure the enough connections for the correspondences. Thank you very much. Okay,
Sure.
let me continue. Thank you.
Sure.
Let me continue reading more questions. Next question. If hospitality and personal services, this not this one. Yeah, this one. Yeah, sorry. Yes. If hospitalities and personal services may dually suffer from the COVID-19, how can we reorganize these sectors to be more resilient? So that's the second question. Martin, please.
Sure. These sectors are very sensitive to the crisis. That, as I mentioned, the biggest collapses in economic activity we had were in Caribbean countries because some of them depended 20, 30, 40% of the GDP was related to tourism. Of course, the safest way to come back is vaccination, is the safety that vaccination offers. But several of the countries have been moving into innovative solutions from attracting people who, without not having to pay taxes, to telework from Caribbean islands. So you may go through your quarantine and all that, but you can still attract people. They are trying to strengthen the image of the quality of their health services and testing, tracing. I think as we evolve to more standardized approaches like passports, health passports, which are being considered, that may also help. But for sure, it will take some time before tourism comes back in full. We see vaccination is impacting a lot within the US. Hopefully, by the end of this year, it will be the same or next year for Latin America and the Caribbean.
Thank you very much. Let me continue reading more questions. What policies should be promoted in Latin America and the Caribbean countries to alleviate inequality to reduce the most vulnerable who are the most affected by the pandemic? Martin, please.
That's a very good question because I think one issue I didn't go into detail is that the pandemic is not only affecting levels, it's affecting distribution. I mentioned some of it, talking about the recovery, talking about the fact that digitization may leave part of the population out, be very good for very good for people who work in these expanding sectors. Will not be good for those who cannot telework, who cannot work remotely. So that's one aspect of inequality. During 2020, the way in which tested the problem itself blatantly was through informality. The kind of policies that were put in place in advanced economies often continue to be under lockdown. But you are an informal worker. There's no say. Your things are just going out and working today here and having informal staff. They have jobs that were not will not be done remotely, involve personal interaction. They were exposed to the pandemic more because of contact. The region responded well in the sense that those programs, in spite of the very limited fiscal space that countries had, the kind of transfers were put in place massive. 5 or 10 biggest social transfer programs in the world were in Latin and the Caribbean. The best one by far was in Brazil. And there, what saving grace was that the region already has, in many places, social registries. So people may be informal, but there have been social assistance programs that know which ones are the vulnerable households. In the case of Brazil, is the well-known Bolsa Familia program that has been in place for a couple of decades. It's very effective in reaching out to poor households. That's what the government of Brazil used to provide social transfers on a gigantic scale. So when the crisis started, when the COVID-19 crisis started, anticipating a huge increase in poverty, perhaps 15 million people falling into poverty, by some other estimates even more, up to 30 million people falling into poverty. When we look in retrospect at our estimate, the number of poor maybe declined by 1 million people. How can this happen? Well, a big chunk of the answer is because of Brazil. In Brazil, the generosity of the program, good targeting program, was such that basically fell. We estimate that there are 12 million fewer poor people in Brazil at the end of 2020 than the beginning of the pandemic. And that for the first time in a long period, inequality in Brazil declined, which is quite remarkable. It was not the same across all of Latin America. Across the rest of Latin America, there were programs that helped it, but not to the same extent. Now, the problem with these programs is that a program in the scale that Brazil put in place in 2020 is not replicable year after year. Brazil spent 12% of its GDP in fiscal stimulus. You can do that 1 year, but it's like the difference between running a sprint and running a marathon. You cannot run a marathon that way because simply your debt becomes unsustainable. So what can be done, and is something that I mentioned very importantly, is to take advantage of digitization to increase formalization, to think, for instance, how social protection programs can reach out to a lot of small jobs that increasingly use electronic payment systems that pay through mobile phone, that work through platforms, that use credit cards and other instruments. We can know how much people make, how much they earn, and we could have social protection programs that do not care about who your employer is. You just work it, you made money, this is what you contribute, this is the pension you get. So this is a great opportunity to rethink social protection in the context of greater formalization in the region.
Thank you, Martin, for your responses. Let me read several questions and points raised during your presentation, and I'll ask you to respond all together together with your final remarks to the stakeholders in Japan. First one, comment sent by Professor Yoshino. Thank you very much for your comment. Services sectors are affected much more than manufacturing sectors by COVID-19. Productivity improvement such as hotels, restaurants may not be so easy. Is there any good policies to mitigate shocks in tourism sector? So that's the question and comment from the Professor Yoshino. Thank you very much. Then the point sent from the Yasunaga-san during the Martin presentation. Thank you very much. Compared to situation in Japan, Chinese vaccination rate is higher than that in Latin America. However, they do not seem to consider the risk very much. Is it related to the price of the vaccine or political relationship? In addition, some of the Latin American countries like Costa Rica or Colombia, they use saltwater fake vaccines instead of vaccines. Isn't it the vaccination rate in Latin America unreliable? So that's the point raised Yasunaga-san. And then we received two more points posted on the chat screen. First, Anissa, thank you very much. As a cleanest energy matrix in the development country, is there any long-term initiative strategy besides large subsidization to overcome expensive electricity costs? And then finally, comment from the Shimamoto sensei from Kyoto. Larger employment losses among the women seems in Latin America region. What if compared with other regions? So that's the comment from the Shimamoto sensei. So I would like to ask Martin to rather comprehensively respond some of the board's points raised by our viewers, and then we wrap up our seminar. Martin, please.
Sure. Thank you very much, and thank you all for the insightful questions. I'm not sure that I can answer them all in the 3 minutes left, but let me try to tackle some. I think on the first question by Professor Yoshino-san, service is a very heterogeneous sector. So we have some of the subsectors with the greatest difficulties: tourism, hospitality, personal services, and some of the sectors that are thriving: logistics, ICT, finance. So it's a very granular. I will not take it to service in general. I think there is a lot of granularity. It is true that Latin America and the Caribbean, on the question on vaccines, is relying to a large extent on Chinese vaccines because they are available. And the problem is that mechanisms like COVAX have turned out to be relatively slow. It's not like countries did not want to go through COVAX, it's that they are still waiting for the vaccines to be deployed. I think the understanding is that the kind of technology behind vaccines like Sinovac is a traditional, well-tested technology. So one can discuss effectiveness, but safety seems to be relatively good. But it is true that in countries in Latin America and the Caribbean, we have seen, especially in Latin America, cases where vaccines disappear, where vaccines are fake vaccines, when you have weak governance and vaccines are worth so much, when people are willing to pay a lot of money to get their families vaccinated, then the risks, the integrity risks that arise are important. And that brings, again, quite a lot of unhappiness in the population. Remember that in 2019, we had episodes of social unrest. You can imagine after 1 year of crisis, when you have these episodes with vaccines, they become very difficult to swallow for the population. But it is true that Latin America and the Caribbean is in the middle of vaccine diplomacy. And so who comes first and who offers vaccines first is something that countries will consider. Can you remind me the last question? I wanted to answer the last question.
Yeah, the last question from the Shimamoto sensei: larger employment losses among the women. Yeah.
Yeah. So that one is more difficult to answer because data for many developing regions is not comparable. We started in the World Bank with telephone service because, for instance, the typical labor force surveys were not being conducted because there was risk in going and knocking at the door and asking people questions. Many developing countries don't even have labor force surveys. So the comparisons are uneasy. My impression is that female labor force participation has increased more in Latin America than in other regions. Probably has been more resilience, but I will not have numbers to really substantiate my answer. I know that I have not answered everything, but I see that we are on the hour and I don't want to abuse the time of our audience.
Thank you very much. We had a pleasure of having Martin Rama, Chief Economist for Latin America and the Caribbean regions, with us from Uruguay this morning to present the latest edition of the LAC semi-annual report. Martin, thank you very much.
Thank you all for having me with you today and for your interest in our region. Have a good day.
Great, thank you very much. Okay, so our morning seminar will take a Golden Week break next week, and we'll come back with interesting programs in the second week of May and onward. Please check our website for the details. Enjoy your Golden Week holidays if you are following a Japanese calendar. Stay safe, stay healthy, and thank you very much. See you in 2 weeks. Thank you.